folks, I'm Melly Little, and this is your daily TA wrap. Well, we take a look at these markets from a neoclassical perspective and ask ourselves, what happened today? And what does it tell us about tomorrow? I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here, from the base of what has become a snowy Rocky Mountains. Folks, I'm glad you could join me. It was another day of, I wouldn't call it turmoil. It was a pretty mild day, really, in terms of volatility. The markets just keep hanging. They were down today, but for the most part, they're still hanging up here. They don't want to give it up. They know that there's only 2 days left here before a deal has to get done. And it continues to be the case that they expect the deal to be done. And what else can I say? That is what's going on here. So the industrials, they were down 133, 15,168. The S&P's down 12, 1698. Back under that 1700 number. Composite down 21 and a quarter, 3794. The NDX down 11 and 3/4, 3244 and a half. And the Russell drops about 10.5, 1079.62. Now, what took place today was something different than what we've seen, and that is that we actually started to see some, shall we say, give back of some of those levels. S&Ps, for example, they go over the high, back under it. Now, what you're going to see on a lot of the charts tonight is over-unders, but they don't really have 2-bar reversals because you really just went over and back under, but you had heavier volume. Most of them have enough of a push to count as an extended move because of the compressed time, but it's not a 2-bar reversal. You just went over, back under, higher volume. In the case of the S&Ps, the only thing it really did tonight was it got back underneath this big bar, right? The wide price spread bar, the low of it 1735, 1700.35, I should say. 1698.06 is where we close. Volume, as it went into the big bar yesterday and again today, in terms of the high volume bar, volume's not even close. Wasn't yesterday, wasn't again today. Comes back, gets back underneath there. As we said before, you can't stay in there more than a couple bars or you're going to try to seek the other side. Well, just to make it interesting, they slide back underneath it. So now you actually have the setup to where you have a little higher volume so you can go back up there, but at the same time you closed under it so you can actually come back down. Mixed signals. Same thing we've seen for a very long time here. Mixed signals on the S&P. Dow Jones really, who knows what this thing's doing. I just don't think it's worth spending our time on. Let's go to the ones that are worth looking at. IXIC, broad NASDAQ composite. This one tests the top. Top has 17.9. It does 17.4. Test it. Fails at the top. That's after an extended move. Of course, it has higher volume as well, which means it can go right back up there and test it one more time. That's your NASDAQ. The NDX looks exactly the same. Remember, the NDX tested yesterday. They test again today. They have lighter volume. They fell again. That's twice. The Russell. The Russell goes up yesterday, sets a new high, doesn't have the volume, comes back and does an immediate retest, regenerate. The bottom of the bar it's retesting is 1077. You got about halfway back to the bottom of yesterday's bar almost. Volume a little heavier. You didn't get over the highs, right? So it doesn't have to go back up there. It can actually come all the way down and test. That's where your support zone's setting up as well. I expect it's going to try to test it. I don't know if it's going to do it tomorrow because we got mixed signals everywhere, but this one is the only one suggesting that it can actually come back and doesn't have the need to go back up and do another test. So the indexes, you would say that if you had to rank them like 1 to 5 in terms of 5 being bullish, 1 being bearish, maybe they're a 2.5 or something, right? in terms of the daily charts. I was looking right before I came on the air here, I was looking at the major sectors, and I'm going to segue into some of the earnings as part of this discussion, because in the earnings, we're starting to get enough of them now to try to get a read, right? Today you had a fairly decent set of numbers. You had Citigroup, Schwab, Coca-Cola. You had a couple of transports. You had one of the mining companies, a pharmaceutical, and after the bell you had some semiconductors. So let's look at these charts, and I'll kind of segue back into these as we go over it. So if we're looking at the transports, let me pop the transports up here. If we're looking at the transports are actually hanging up here not too bad. They went up, had some volume. They didn't have enough volume to get over it. They tested the resistance zone, failed at that resistance zone. But if you look at some of the, I'm going to get another tab here to make it easier for me to switch between charts. So bear with me for just a second while I get another one up. Actually, that's not going to work. What I'll do is I'll do it this way. So let me just type them in one by one. So if we look at the transports and what did report today, JB Hunt was one of the names. This stock shot up there and gave it up, right? We were looking at this last night wondering what it was going to do. It's in a range trade. It's right near the highs on the weekly, but you can see the volume comes out of this thing. That's not actually a very good close. So JB Hunt is not giving us a good sign. Now what did give us a good sign had nothing to do with earnings, was FedEx. FedEx comes out and tells us that they're going to buy back like 10% of their stock. Now of course when they tell you they're going to buy these things back, that doesn't mean they'll actually do it. But you know, the writing's there and they say, hey, we're gonna buy it back. So if FedEx does buy it back, well, I guess maybe there's a reason for this thing to go up as much as it did. But it shot up. This is a large weighting in the transports. That's what held them up so well today. After the bell, CSX reported. This is the large freight train company in the east. They do a lot of coal, but they also do a lot of other shipments. And they actually do a lot of shipments of things that can be shipped other ways. And those numbers actually looked a little bit better today in their report. In other words, they're picking up traffic from things that can be shipped by truck, for example. And after hours, they reported that it looks like they were up about 1% and an eighth. What did they close here? It closed at 26.10. After hours, they traded at 26.50. 26.42 by 50. So they're up another, half a percent or so. So looking at this chart, if you look at the weekly, look at the daily, they're coming into resistance, nothing special. Tomorrow will be an interesting day to see how they actually trade. They're up in this big top range. All the transports are up here in this same sort of consolidation on the weeklies. Of course, most charts are up there. It's not just the transports. So that's the transports. If we go back over now and take the next one, the semis. So the semis, as you know, have been one of the strongest sectors. Today or yesterday, they actually pushed up, made a new high. Today, they go over it, back under it. They have heavier volume, and they're coming back to do a retest regen. The bottom is 40.32. They did 40.44, doing heavier volume as they're coming back to retest. That says they can test more, and after the bell, we actually got some bad numbers out of most of these, which means they probably will retest some more. So let's look at these right quick. We'll start with Intel. Intel reported, hit their earnings, but their outlook's not so great. Intel traded down, I think it was about, let me see here. Intel was down about 3%. No, that's another one, 2%. They traded at $22.99 after the bell. $22.99 brings them back into this lower range. So you have kind of an upper range and a lower range brings them back in the lower range. That's going to become resistance. That's where all the big support is. So we'll see if it can hold there. And it trades right down into them. So these two big bars back from July 25th and 6th on the way up, those are the bars it's going to test tomorrow. If it can get under them, then that's going to be actually pretty bad, and Intel is going to come back in and do its retest on a weekly basis. If we look at one of the other ones that's big, LLTC, these guys now, they traded down 4%. This is Linear Technologies. They had this strange spike high that they gave it all up on that spike, and then they went back into it, tested it here, couldn't do anything. This traded down as low as, what is this, 38.48. That's going to trade back into the lows. And if I look at it on the weekly, well, actually, let's do the weekly here since I'm doing them by hand. So if I look at it on the weekly, that's going to bring it right back into these big bars, 38.45. And it's going to test that low. This is not a good setup for it. This is gonna trade back into this bar and potentially break it. So Linear Technologies is not the huge weighting, but it's another sign that the chips are not doing quite as good as people thought they were. Another one that didn't report today, but actually came out and warned, was Teradyne, or actually Teradata. And Teradata breaks multiple swing point lows on the weekly, and of course on the daily. This thing is going to trade way back. I mean that's a cave in. Let's see what it looks like on the monthly. So Teradata, yeah, it's giving it up on the monthly as well. This stock's spent. It's done it. And if you look at the monthly, look at your volumes that are down volumes. You can see that there's some trouble here. But the chips have been so strong that your trouble stocks are being held up by the strong ones. So, if you're in the chip sector, or if you're trading a strong sector, don't go after the weak ones, because the weak ones are going to be masking their weakness as a result of the sector pulling them up, and you're going to get hammered like this when you wake up one day and find out that you can't get out. So if you're trading anything, whether it's now or any other time, don't pick the weakest in the group. Pick the strongest ones. Yeah, they can surprise you, but the odds of them surprising you are a lot less than this. And that's just, what can I say? So that's the chip sector. Let's flip over to the XLB. This was actually trying to pick up today. This is one of the few that actually did a 2-bar reversal. Somewhat extended move, so yeah, this one will probably try to come back. The only one that reported here is Rio Tinto, and it's really not in that group, but it's mining. Volume expands going towards the top. This is an industrial metal, so unlike the precious metals, these guys are getting some decent support. Most of that's coming out of China. As long as China does good, these industrial metals do pretty good. And if we look at the rest of these, we're going to have some energy stocks later this week. Another sector that's not doing anything spectacular is the XLF. You can see here is an over-under, but it has heavier volume. The one that did well today was the broker Schwab. Schwab had a nice big spike up, but as you can see, it gave up most of those gains. Volume's there, so it will probably try to hold. But you don't like to see a stock gap that far and give it up that hard. It's come a long way, so I guess you could expect it to some extent. But you gap over 2 highs, it will probably hold. But it's going to range trade after that, I would expect. Citigroup reported this morning. They couldn't get anything going today. Volume expands. This thing's coming back. If I look at the weekly on it, I believe this one is set up pretty ugly to come back. All the way back to this low, I think, is where it's going to try to get to. So you get a high volume, or fairly high volume low sitting down there. That's the area we'll probably try to trade back to. So if you're wanting to get into something like this, you want to wait and get the retrace. You're fixing a swing point break on the daily. Yeah, I would think it's going to break them. It's going to come down here, test, break, go down to those other ones. We had two of them last week. I want to quickly look at them one more time because they're so important. JPM, still hanging. So you can see they're not getting any juice off the earnings. They're just hanging at them. And WFC, same thing, can't get anything off of it. So your financials, not showing you anything, earnings-wise. Chips, not showing you anything. Matter of fact, they're going to show you damage tomorrow. That's the chips. Now that's all, not all of technology, because you've got Google, you've got Apple, you've got some others that are going to report that are also going to have huge impact. Microsoft even. But your chips are a large piece of the NDX. They're going to move that sector, and that market is going to suffer as a result of it if they keep coming out this way. If I look at the rest of the stocks, we don't have enough information anywhere else yet, and there's really nothing else to talk about in most of these other sectors. So let me go to the Ox markets right quick, see what we got there. So let's start with the bonds. So the bonds traded actually flat today. Yeah, about flat. They were up, they couldn't hold it. Bonds still look to me like they're going to try to come back down in the bottom of this bar. And that's probably going to be the buy when they do it. Don't know what the reasoning is going to be or how they explain it to us, but that looks like it wants to do that. The dollar looked like it wanted to spike back up, and it did today, and it couldn't hold it. It got a little bit more volume, so the high it's trying to get into is 76. It got as high as 74, and this is despite, well, I don't know if it's despite. There's, the budget deal everybody still believes is going to happen, and so the dollar is getting strength off of that, despite the fact that there's a risk that we're going to default, right? It's trying to get back into as low as where it's trying to go. Let me look at the FXE. Yeah, FXE looks like it fell today. And that should be resistance, not support. Let me see what junk bonds look like. They're probably strong still. Yeah, they're still hanging there. I saw oil coming down. Oil's been having a hard time. Yeah, oil is getting ready to break out this low. If we look at it on the weekly, and part of it is, the ideal that somehow we're going to work a deal out with Iran. That's part of it. Part of it is that we're just producing a lot of oil now, and the economy is not strong enough to use it all. This is going to try to get back into this bar deeper, and it's going to take it back in. It has never done a retest regen off this high, nor off of this one, and that looks like where it's heading. So if you're long oil, I'd be careful, because it looks like it's trying to excuse me, set up for a move back down. All right, let's see here. Yeah, I skipped some sectors. Let me go back and hit them. Yeah, another one that reported today was Johnson & Johnson. That was the first look at the pharmaceuticals. So let's pop in here and we can pull up J&J. J&J was up today. It was one of the few that actually held the gains, I believe. And just barely. It was just slightly up. So here's J&J. He got up in there and fell. Volume expanded, got over the high, didn't have the volume. Look at the high and look at the volume on this. That's a failure. This thing's coming back. So J&J is not going to do it for this sector. And if I go to the sector itself, the sector actually got this is the only other one that got a 2-bar reversal today. So you got a 2-bar reversal on the XLV, and you also got it on the XLB of the materials. So J&J goes over, doesn't help. You go over it, you come back, you got lighter volume. That's going to try to retrace, and J&J would retrace with it probably. I haven't looked out there to see what other ones are reporting in terms of pharmaceuticals and the big drug pharma companies. Coca-Cola also pushed up today and then right back down. They reported. That also looks like a failure. I'm looking over here to see if there's any other big ones. Those were the main ones today. So tomorrow there's quite a few. So let's take a peek at those and see if they give us any idea. I'm going to actually flip to a different watch list where I have these guys. Okay, so tomorrow you got Abbott Labs. Let's see what else we got at Bank of America. There's some more. There's quite a few actually of the financial stocks again tomorrow. And then you've got some big names in the tech sector: IBM, eBay, SanDisk. Give us a look at memory. Xilinx is going to report. So you're going to have some more chip stocks tomorrow that will give us a further read on what's happening in those sectors. So let's quickly look at some of these and see what they look like. We'll start with the pharma. Let's see what Abbott's doing. So Abbott, this one's struggling as well. Weekly struggling. This I just don't see this going anywhere. It's in danger of breaking out the lows. Going back to the financials, so American Express, credit card, the first one to report. And that one on a weekly is range trading, and it's doing the same thing here. That's not really giving us a clue either. It may pop to the top, but it looks like it fell up there if it does. Here's Bank of America. So all these financials are range trading now at the highs. And this also looks like a failure waiting to happen to come back. How about eBay? Let's go look at some of the tech. So eBay is one of the one of the stocks that I had traded into a long time ago. If you look at eBay, it's got this big range trade going on. I wouldn't be surprised if eBay comes out and actually disappoints and you see it trade back into this lows. We'll see how it trades tomorrow after the bell. But one of the things that's interesting with eBay is when they report, they typically get hit, no matter what they say. And then they usually rally afterwards. So we'll see. I mean, that I've watched them closely over the last couple of years. That's been the DNA of it. So IBM, it breaks multiple swing point lows on the weekly time frame, gets a 2 to 3 bar move down, comes back up, test into here, fails. On the weekly, that doesn't look good, and on the daily, it looks worse. IBM looks set up to fail. That's interesting. IBM's a huge weighting. It's not as big anymore because now you've got other companies in there that have big weightings, but it's still a large one. Let me look at Xilinx. Let's see what this one's set up as. So it comes off hard today off the chip weakness elsewhere. It's coming back into 4.8, doing 4.1. Man, this one's right now it looks like it's going to hold, but it's coming back with enough volume that it may just take it out. And then that would set up a larger range trade back into the bottom of this bar if it were to do it. But folks, when I look at these individual stocks, they don't look nearly as good as the sectors in the market, which is interesting. So, let's take that thought and run with it for a second. If you think about stocks and how they move, right? You typically get stocks, especially the larger weighting ones, that move the sectors, and the sectors eventually move the market. If you start seeing a lot of weakness in a number of stocks in these sectors, then of course that's going to feed over into the sectors, especially those that are weighted. And I typically try to watch the weighted ones. That's what you see me looking at earnings on, because they're the most important ones. Everything else will tend to follow them, rightly or wrongly. So when I look at this, as I've done with you tonight, and it's kind of an eye-opener for me, I didn't see it. it's not actually enticing. And then if I go and I bleed that into all this news flow and the by the rumor that's been going on, it makes me think that you could get some sort of a nice pop on the news that then gets sold as a result of the earnings not really enticing people. If you follow what I'm trying to say. Here's one more that reported today after the bell is Yahoo. Yahoo traded, where were they trading today? They traded down on 40. They traded down on big volume, didn't they? Yeah, and after hours they were flat to down. They were down slightly, 33.94. They closed at 33.38. So they actually gained about 60 cents after hours. So Yahoo trades up slightly, but I don't think it's going anywhere. Yeah, I can't see it getting back over this 33.33 area and staying there. Excuse me, 34, 32, 34.50. That's going to be tough to get back over and stay over it. Now, this has been on a huge run, right? So it could stand to come back some. And I think that's the dilemma. Is a lot of these stocks, and the ones I was talking about setting up range trades potentially, like the financials, they've had big runs. I mean, the whole market's had big runs. If you're going to push higher, you got to have earnings. I mean, in the end, it comes down to earnings, right? It comes down to revs and earnings growth. And the revs we know really aren't growing that fast, yet we're seeing huge gains. Part of that is the fact that, the huge gains just haven't come yet. Nobody wants to put their money out there. There's been so much fear of another, 87 type crash, 2000, 2008. That's the concern. And so a lot of people just have a hard time putting their money in the market. But a lot of it, is just speculation, right? I mean, what's something worth? It's what somebody's willing to give you, and that's about it. So it's not, I'm not sure how else to say it. I just think that, there are times where there's reasons to take a lot of risk, and there's times where there isn't. I like to take a lot of risk when I know that my odds are good, and I don't when I don't know that. And so I would think that what you want to do at this particular time is wait for a better setup. Let me take this one last stock here, GTS, Triple Management Corp. I wouldn't touch this. This looks ugly. If anything, I'd be selling this thing, but I don't see anything in this one. All right. At this point, it's all news flows, folks. After hours, I saw the market shoot back up 0.5% because the House canceled a vote. Until this ordeal is over, which is going to be tomorrow, one way or the other. Excuse me, not tomorrow, but tomorrow or the next day, right? One of those, somewhere in there, they're going to have to solve it. Either they're going to default it, or they're going to find a way to kick the can a little bit farther down the road, or they're going to do something, right? And I expect, this market's acting like it wants to pop on that. But I don't know that it's going to go far. And I suspect what you're doing is you're setting up some sort of a range. Tommy says it over here as well. Some sort of a range, because the general market has been stronger, or at least looks stronger to me than this specific stocks that are making it up. And if that's the case, it can't keep going. The narrower you get, in other words, the fewer that participate, the harder it is to keep going higher, and at some point it ain't going higher. And we may be reaching that point here. So we'll see how that trades out. I do think you should be careful here. You're going to get some volatility when the news hits, and it could be both ways. Folks, have yourself a great night. I appreciate you dropping in. Tell a friend, tell two. As always, I'm L.A. Little. This is and was your daily TA wrap. Have a great night, folks, and I'll take your questions tomorrow. and try to answer them again. Take care. Good night.